Well, hello, everybody. This is the weekly market analysis brought to you by DAS Trader. This is the week of November 2nd to November 6th. My name is Michael DeGioia. I'm an educator and the director of institutional sales for DAS Trader. And I'm joined here, as always, by Jill Malandrino, global markets reporter with NASDAQ. Jill, how are you today?
Good. Glad the week's over. It's been pretty crazy for those of us in media, but here we are.
Busy week, to say the least. I would certainly say that this week was a week full of surprises and certainly a little bit of biting of nails for some people. So let's just jump right into it. And so this week we have the election update. And, the first thing I wanted to start out with is I believe that a lot of people have been wondering why the market did not go down with a contested U.S. election. And the only thing that I could come up with is that there was no blue wave as the media had predicted. And certainly Wall Street loves to have a split hand in Congress and the White House. So they don't want all the power to be consolidated in one party's hands. And I'm thinking that that's the reason for the rally on Wall Street, that as the races kind of settled out, that there was no blue wave, that the White House might be in the Democratic hands, and that Congress certainly would not be completely in Democratic hands, that the Republicans made some gains there. Jill, do you have any additional thoughts as to share with us as to why the market would rally massively on a contested, unprecedented event in U.S. history?
Well, historically, markets tend to perform better when there isn't all Republican or all Democrat, because it helps to keep policy in check. And typically, that's what you'll see if you look at historical charts of how we see the House and Senate flip after so many sessions of being the red or being in the blue. I think another big part of it is as well, and it's funny when we're trading or when we're doing content in media, and Mike, you know this better than anyone else, like when something feels like something in the market, when we woke up Wednesday morning going through the results, the futures didn't do anything too crazy, but it felt as if, because that one element of uncertainty, the physical election itself, was out of the way, right? Because what are the three things we're focusing on the most, right, in Q4? The election, COVID-19, and stimulus, right? It's like earnings were a blip on the radar. Everyone knew nothing was going to happen with the Fed. Powell did a very good job with being deliberate to not do anything or say anything that would spook the markets when he spoke Wednesday or yesterday. I don't even know what day it is at this point. But the fact that you remove that one element out of it, and yes, it will most likely be contested, and yes, this is going to drag on for a while, but we at least have that event out of the way. And it seemed as if markets took a collective sigh of relief, because it wasn't just equities that were moving. There was a number of asset classes that were moving to the upside.
Yeah, and we're absolutely going to be looking at that. I totally agree that the market hates uncertainty. It's just uncertainty. And as soon as the election was over, the most interesting thing was watching the futures during the actual election night. I mean, there was one point when the market was down huge on election day night, and then the market completely reversed and went back to the upside, and then went back down, and then went up and stayed up. And that was all during Tuesday night's election results. So that was a bit of a roller coaster. But then after that, it was nothing but up, up, up until today, which was the first sign. It was actually down quite a bit this morning. And then, of course, we had some very good jobs numbers that came out, and then the market rebounded and kind of held the rebound for the most part. It did close slightly down, but after being up massively for the week, that really is a good sign that it held most of its gains going into the weekend. Now, unless we gap down, certainly that would be, that would be one thing that could happen, is a gap down. I think another thing that the way the election panned out, I think that the fact that there were no major riots, no violence in the streets, people were boarding up their stores, preparing for the worst, but the worst never came. It looks to me like there is a contested election, but it's being contested mostly in court. And I think that was also another uncertainty that seem to diminish as the day and the days have gone by. Wouldn't you agree?
Yeah, I would agree. And, I always try and find the silver lining with these things. And Mike, I'm hoping the reason is everyone is just exhausted by this. At the end of the day, we're all Americans. We want to show strength and unity on the global scale, right? And I just think it's been chaotic, right? And, people just want to move on. The holidays are coming up. We know it's going to be a little bit more difficult with COVID-19, especially for those of us in the Northwest, Midwest, where it's colder. Cases are just exploding. We're over the 100,000 mark. We have 20% of the cases in the world, even though we're 4% of the global population. We're not winning. Those numbers, we're not, just because, we're only 4% of the world and 20% of the cases, that might sound good if you take away the reasons why, but we are not winning. And, it's going to be a difficult winter. And I'm really hoping that we can have a peaceful transition and move on from this, because more than anything, we need to heal. And people are exhausted from it. So, you would like to think the administration and leadership would be working on unifying all of us, but that certainly hasn't been the case over the past 4 years. So, hopefully, whether Trump remains in office or Biden picks up the baton, that we can come back to some sort of unification.
Absolutely. I mean, the next question I have here on our board of topics is COVID-19 update. Will there be a COVID-21? And the reason I put this up here is because it seems to me like there's been a whole bunch of strains of COVID, and certainly it seems almost like there is a different virus that's somewhat more contagious going around lately, because the numbers are just absolutely through the roof in Europe as well as the United States. And Europe is, of course, locked down across the board. The question is that, how long will this continue? There's a lot of reports out there that COVID-19 or COVID in general, coronavirus in general, mutates. And that there are a number of strains floating around there. Like in England, they were saying, I was recently in England, and when I was there, they were saying that the strain in the UK is largely from Spain. And of course, I don't know where the strain is from here in the United States. I think we probably have mutated a few of our own strains. But the fact of the matter is that it certainly seems like it's much more contagious and widespread. And the question is how long will this continue? And I don't think a lot of people realize that COVID-19 is coronavirus 19 because it was discovered in 2019. And the reason I put up here COVID-21 is because, we're going into 2021, right? I mean, is it going to continue into the next year, into the new administration? My guess is yes. And if you haven't heard COVID-21 before, you heard it here first.
Well, Mike, it's funny and you laugh, but the fact of the matter is we have a big problem with dissecting fake news and not trusting science and medicine in a significant part of this country. And it's, of course, migrated to other parts of the world, that kind of mentality. But you do have to tell people, this is the reason why the number was established. Look what happened when coronavirus first came out. Corona, the beer, had to go on its social channels to let people know.
Yes.
This is nothing, right? So
has nothing to do with Corona beer.
Right. It's like you have to, even when, the president has suggested to ingest, cleaning products or shine a light in your system or whatever that was, Clorox and Lysol had to come out on social media like, this is not a good idea. We do not recommend this. It's like, don't eat Tide Pods. So, you're not being flippant in explaining why these numbers are attributed, because people do need to be reminded. So, but in terms of what we have this next year, look, this won't be our first or our last pandemic. My hope is that we've learned from this one, although again, we've had such a disjointed response to it that, I'm not quite sure what that's going to look like going forward. The fact of the matter is, our health agencies have been dismantled and essentially gutted, right? And they need to be rebuilt back up. We need to get our population to respect science and understand it. And there is going to be a lot of work. And, even when, and you and I have spoken about this so many times, once we get vaccination and therapeutic approval, a light will not just switch on. We first need to get it manufactured at mass scale, and it needs to be distributed through the population. So it's just going to take some time for it to to filter through. This is why when the experts say, this is like a 3 to 4 year process at times. I think the medical community did a fantastic job working with the resources that they had and trying to respect that science. But, sometimes these things are bigger than the things that we want.
Yep, absolutely. And I think that masks are now the new most forgotten item on what people forget when they leave the house. I think I have masks in every pocket of my jacket, right? Because I collect masks. If somebody's giving out a free mask now, I take it and I put it in my pocket. And then the other item that I always take with me is my disinfectant here. But certainly we've all adapted to the new normal, so to speak. And it's certainly been an adjustment, and I think that going into 2021, we're going to continue to adjust and deal with it accordingly. And yes, it has been certainly a different year, and the response has really been very different all over the world. And I'm one of the few people who have gone all over the place and seen the different responses. I mean, it was virtually non-existent in Turkey when I was in Turkey, and I was really, really surprised in Brazil. Almost everybody wore masks. I stopped in Brazil briefly, and I also went to Mexico briefly, and Mexico as well. Seemed like people were wearing masks, although the test getting off the plane in Mexico was, "Do you have COVID-19?" And I said no, and it's like, okay, come on. But certainly it's been very varied around the world. In the United Kingdom, there were a lot of forms to fill out. So I think that we're getting used to doing business and operating different ways, considering the worldwide pandemic. Well, now let's jump to the charts. Here we are. The weekly chart of the QQQ. I mean, really kind of an extraordinary week. I mean, not very often do you see a blast off week the way we did here. I mean, basically straight up, straight up the entire way. Let me just see if my laser pointer's on there. Yep, laser pointer. Is it working? I don't think it's working. That's all right. But needless to say, we have a very, very strong upward move on the QQQ for the weekly. And you can see that we've been up for multiple days on the daily as well. We're kind of coming into resistance now. So this is going to be the point that we either break out or we fail and certainly don't continue. But I think that it seems to me like, that we may have potentially broken out because we've closed near the top of this range. The fact that we didn't sell off significantly at the end of the day, closing the week kind of in a bullish way, kind of indicates to me that this is a little bit more bullish than bearish. But we'll see what happens on Monday morning. On the SPY, we also had a very, very bullish week after a very, very bearish week. So the bullish week completely reversed and erased the bearish week. And on the daily chart, you can see we're kind of in that same kind of pennant formation. And when I get to gold, you'll see that we've seen this formation before. On the Dow, again, Dow continuing to be the weak man of all the charts on the major indexes. We have a double top and a slightly lower high. So maybe it'll take a little bit longer for the Dow to get into that breakout area or breakout region. But needless to say, the Dow also making an incredible rally and recovery this week. And certainly, helping to, to erase some of the losses from the week before. Here on gold, I mean, you and I have been on gold like white on rice. Mm-hmm. We put in a low and then a higher low. I mean, the main reason that the other reason that the market sold off is there's a really significant move down in the dollar this week. The U.S. dollar with the contested election was the real victim of the contested election uncertainty. The U.S. dollar got very, very weak. That the gold surged to the upside, specifically on Thursday. You can see here on the beginning of the week we were up slightly, and then yesterday, Thursday, we blasted off. We held those gains going into the weekend, which is very bullish. Probably ripe for a little bit of a pullback now because we kind of hit the resistance level. But certainly gold has been a major beneficiary of this market uncertainty and this political uncertainty, as you would expect it to be, right? I mean, anybody talking about gold in all?
Yeah, it was interesting to see gold's performance with equities and how everything was moving, as I mentioned earlier. But I had Juan Carlos Artigas on our show. He is the head of global research for the World Gold Council, of course, a very well-respected institution, and one of the axes on gold. And so we were talking about that. And Mike, you and I have covered this virtually every week for 8 or 9 months at this point on gold and how it's been performing as would be expected. And regardless of the outcome in the election, whether it's Trump, Biden, blue wave, purple, whatever it was going to be, the base case remains the same, right? Low interest rates, and there's still a lot of uncertainty and volatility within the marketplace, right? So no matter what the case is as a result of the election, they still expect upside movement, at least through 2014 and into the first quarter of next year. So, the pricing has been reflected in that. Now, that's on a fundamental perspective. Of course, when you take a look at technicals and you're making shorter term trading decisions, that can be something very different. But for the long term, the base case is still there.
Absolutely. And I'm a big time gold bug. Basically, in my opinion, whoever gets into the White House is going to be passing some kind of stimulus. That's basically why I believe gold went up. Whoever gets into the White House is going to pass stimulus, and it looks more and more likely like that's going to be Joe Biden. But whoever does get there, stimulus will be passed, and that will weaken the dollar further, and that will reinforce the case for gold. If the dollar continues to take on debt, gold will get stronger. That of course brings me to my next chart. We basically had a breakout to new highs on Bitcoin, and I'm using the GBTC as we basically have a largely equity driven audience. And GBTC is the Bitcoin tracking stock, and Bitcoin has broken out. I'm a huge follower of digital assets, and Bitcoin has broken out basically to 15,000. It's in the area of 15,000, which it has not seen for a very, very long time. 18 to 20,000 is its all-time highs. It's a little bit extended, just like gold is, probably going to pause and pull back a little bit, but it looks like it's probably not going to stop until it revisits its prior highs. And I don't think gold is going to stop until it revisits its prior highs. Bitcoin has really become digital gold. You have gold, and then you have digital gold, which is Bitcoin. And what are your thoughts on Bitcoin? I know you kind of feel the same way I do.
Yeah, no, I definitely do. And, I'm a hodler, been holding it. I do not go in and out of it just because I am a firm long-term believer in it. It's a tiny part of my portfolio, but I do just to learn about it and understand its patterns, not only from a technical perspective, but why it's moving fundamentally. And whether you're looking at Bitcoin or cryptocurrency or digital assets as a whole, we've seen many encouraging mass adoption announcements come out with Square, with PayPal. The banks are starting to look at it more. Government agents are starting to look at it more. In fact, Lagarde was talking about that earlier this week as well. And I think it's going to be inevitable at some point because DeFi, decentralized finance, is becoming more and more mainstream. There are so many areas of the world that are developing. Africa is a fantastic example of it. Some of the Eastern Asian countries are a great example where they don't have older legacy financial infrastructure like we do. So they're actually way well ahead of we are when it comes to digital banking and digital assets and so forth. And it works. So I think, as we start to become more accustomed to contactless payments, I don't know the last time I've been in a bank, but, I think because people are concerned with inflation, they're concerned with the amount of fiat debt that's out there. They're concerned with, everything's so predicated on fiscal policy. It doesn't work that way with digital assets. So that's why I think it's going to be something, maybe not in the near term, but longer term, will become more the mainstream. And we're starting to see it happen now.
I totally agree. And I would say that speaking of DeFi, I went digging in my toolbox and I found another tracking stock. This is Ethereum. This is the Ethereum ETHE, the Ethereum tracking stock. And, Ethereum is pretty much, they won the protocol wars. And I know this sounds somewhat like Star Wars, but the protocol wars were the rules and protocol rules that DeFi and the majority of the DeFi coins decided to use, most of them ended up using ERC20 tokens, and Ethereum was the big winner. And as you can see, Ethereum has made a very significant move up off the lows, although it's certainly not as bullish as Bitcoin, which is basically breaking out. Bitcoin is digital gold. Ethereum is known mainly as a smart contract, just to educate the people that are viewing this. And ETHE, is a great way for somebody who's not familiar with digital assets and you want to follow this. You can follow this on your trading software. This is a chart that's cut right out of the Dash charts, and you can follow this tracking stock right on your equities trading platform. And you can actually trade it. It's a totally tradable vehicle. So Ethereum also showing a lot of strength, as an alternative to Bitcoin and traditional gold. Talking about some other stocks, these are stocks that we had mentioned in our newsletter and we mentioned last week that were big beneficiaries of Joe Biden potentially winning the White House. And you can see that Apple has made a very significant move up, as most of the markets. Twitter not sharing in that move to the upside. So Twitter not moving up quite as much as Apple. Now, why would Apple do well? Because obviously the trade war started by Donald Trump with China had a very, very negative impact on Apple. Although if you look at the chart, you wouldn't really see it because Apple still had a phenomenal year, but could have a very, very positive impact on Apple that the trade war is probably not going to be front center or even continued. We don't know what that's going to happen. There's certainly a lot of uncertainty over that. So I'm not sure why Twitter. I know Twitter was Trump's main way of speaking to the public. I'm not sure why Twitter would drop, but it does look like it may have had something to do with earnings. But Jill, maybe you want to weigh in on Twitter and Apple here.
Yeah. So Apple, everything you said was certainly spot on. I'm sure there was a sigh of relief that came out of it as we get more clarity with the election. But what's really interesting with Twitter, it's often thrown into the Facebook, Instagram, Snap bucket, but these ecosystems are much bigger than what Twitter is. And there's always that concern that Dorsey, because he is the CEO of Twitter and the CEO of Square, I can't imagine being the CEO of two publicly traded companies. I can't even imagine what the logistics of that looks like, but Square has been incredibly successful, right? So, there is some talk within the board. There's frustration that either, they want to get Twitter more focused, right? And part of it with Twitter is that there's a lot of low-hanging fruit there, and how Twitter doesn't do a good job at monetizing its daily active users. And while they've grown, if you don't monetize it, it doesn't really mean anything, right? So I don't know if you remember in July that Twitter had a pretty significant pop because there was conversation that it was exploring the subscription model, right? And that 4 months later, we still haven't heard anything on that. And even the CFO said on the analyst call following earnings that there's nothing new to report there. So I think that's really what the concern is. While they're seeing growth, if you're not monetizing it and you don't have a larger ecosystem like a Facebook, like a Snap, Instagram's part of Facebook, but you get my point here. They're really not in the same boat. And I think that's why you're seeing that underperformance relative to perceived peers and, other people within that group.
Yeah, absolutely. They Twitter, to me, it's a little, I've never really been able to fully follow what Twitter does except disseminate news, for me anyway.
Right. And see, the thing is, when it comes to social media companies and it's a standalone platform that doesn't really have multiple revenue streams, as you know, social media users are very fickle. Twitter, I don't know anyone I'm talking about my stepkids' age, teenagers, Gen Z, younger kids like that, they're on Twitter. They're using different kinds of platforms. So my concern is when people age out and, what's next for Twitter? What are they going to monetize next? I think that's a concern. So it's when we talk about Apple and everybody loves it, once you're locked in the ecosystem, my entire house, everything is locked into the Apple ecosystem. And I know, Mike, you're a big techie as well. I'm sure yours is the same.
Absolutely.
You can't compare Apple's ecosystem to Twitter. It's apples and oranges. It's two very, very different things.
It's funny how many times you manage to use Apple in different contexts in that. Apples
right?
And oranges, right? Apples and Twitters. But yeah, you're 100% right. The other two that we we're certainly talking about as beneficiaries of a Joe Biden win in the presidency, they have certainly done very, very well, going into the election and certainly right after the election. And if you look at the chart of TAN, it actually, the first 2 days of the week were kind of down, and then it blasted off Wednesday as Joe Biden's, likelihood of him being the president seemed to increase as the races got closer. TAN, which is the solar ETF, blasted off from Wednesday. FAN seemed to, continue to just blast off, from Monday. I mean, it had pulled back very, very deep going into the election, and then it basically blasted off, right after the election. I mean, Tuesday night was a little bit of uncertainty, but after that, I mean, it's been up and away for both TAN and FAN, which is not surprising since that seems to be, moving towards reusable energy certainly seems to be the direction that Joe Biden is interested in taking the country. So these would be two logical beneficiaries of that. AMD, anything semiconductor, I think benefits, and I think I'd love to hear your thoughts on that. AMD seems to have done very, very well after the, in the last 3 days. And I guess that's largely to do with, with the uncertainty of the election going away and potentially leaning a little bit towards Joe Biden. Would you agree with that semiconductors and China trade war are a big thing?
Yeah, I think it's definitely a big thing. And, the SOX index was one of the best performing exactly for that reason. And I think, of course, it's their exposure to China. And while I think what's going to be interesting is that Biden plays well on both sides of the fence. And while there are people out there that are concerned he might not take as a hard of a line approach as Trump did, I still think that it'll be a little bit more fair and a little bit more open when it comes to business. And that's probably one of the reasons why even a lot of the industrial companies did well, because of their exposure to China. And I think when we think about China, I can't take credit for this. I heard it, I think, last night on Fast Money. I forget who it was. But, while we have been focusing on social media and content and the fun things about technology, China quietly in the background has been building the infrastructure for 5G and more business-oriented type of technology. And I think we're coming to terms with how they kind of have the handle on this and we don't. And I can understand why that's concerning, but this is why we need to get ourselves back up to speed and reestablish ourselves as a leader, particularly in the technology space, because we are behind when it comes to the technology that's taking us, through the next 10 years or, the next part of this.
They have definitely invested heavily in the semiconductor sector, and that is extremely important. I know that the China trade war was really negatively affecting a lot of the semiconductor stocks, and I think that the rebound in the SOX index is largely due to that. And certainly we also know that, even what we're using here was originally, I think, in somehow an investment made by China. I know Zoom was one of the was partially had something to do with China at some point along the line, although I think it has kind of grown out of that. But yes, they definitely heavily invested in, infrastructure related to business and doing business online. And I think that, we certainly have to refocus towards industries that are going to go in that direction, not just social media and fun things and search engines, et cetera. But on that note, that brings us to a close. Jill, as always, it is a pleasure to be here with you. I'm just going to do my wrap up on the next few slides. Have a wonderful weekend, Jill, and I look forward to seeing you next week. Everybody there at home, if you have not joined us and signed up for our newsletter, you can certainly join and sign up for our newsletter. Our last newsletter was released on 11/2, which was just last week, and it gave you a full rundown on the election. You can certainly sign up for that at the bottom of the DAS website, dastrader.com. You could sign up to our YouTube channel at DAS Trader TV for market analysis and reminders. You could also certainly sign up for all of our social media links on LinkedIn, Twitter, Facebook, and Instagram. DAS is rapidly increasing our followers there on Instagram. So if you are not following us on Instagram, certainly join on there and follow us on all of our social media links. Everybody have a wonderful weekend. You too, Jill.
Thank you.
Busy week. See you next week, everybody. Thank
All
you
right.
so
Take
much for
care,
joining.
everyone.
Ciao, ciao. Bye.